Hey, what's up, everyone? This is Michael Elliott, CPA and founder at Camp and Park Accounting. I am the campground CPA and super excited to be jumping on here on YouTube live with you this afternoon. Really haven't been active on YouTube in a number of years, and I recently kind of got the itch to get back into it, producing content, really trying to add as much value as I can to the campground and RV park community. This is a community that over the last 5 years I've really fallen in love with. The reason we've probably not been pushing content and things is we've just been inundated with clients, with accounting work, trying to help. We've had so many uh, new owners and investors come into the market. We've been helping them buy parks, get their allocations right, get set up right from a tax perspective. And then now, kind of full cycle, we've seen a lot of them start to sell their parks, some of them doubling, tripling their investment in 5 years. It's just been a blessing to be able to walk alongside so many amazing owners during this kind of crazy season of the boom from COVID and then sort of the plateauing we're starting to see now. But I went back into our YouTube channel and I saw that there were a whole bunch of people who had posted comments, questions on videos that I never got a chance to respond to. So, what I wanted to do today is just jump on here for just a couple of minutes and kind of run down through some of those unanswered questions, the comments, the feedback, just to keep kind of give you all a general idea of the questions that some other folks are asking. And if you are joining me live here, feel free to drop in the chat if you've got any questions about the money, the finances, income taxes, valuations, as it has to do with the money with an RV park or campground. We're the experts. We can help answer that. So drop it in the chat. If I can help answer, I will. If not, I'll try to send you in the right direction. So let's jump right in here. So here, these are questions that I've received directly on previous YouTube videos. Some of them are 5 years old, so may not be applicable anymore. But we'll just jump right in. First question I got was from Kevin. He said, this is about a year ago. He said, Michael, I've been enjoying your content. Just wondering if you're still working as a CPA. Can't get a hold of you. My email address is unchanged. And so if you do have any questions or concerns, comments about the industry, reach me at Michael at campandparkaccounting.com. Michael at campandparkaccounting.com. Kevin, happy to connect with you or anyone else who might have questions. Night Hiker said this on a video that I posted that was, is purchasing a campground worth the investment? This is what Night Hiker asked. He said, I'm planning to develop a weekend trailer park, stay over on 20 acres. Do I just need liability insurance? Starting with just the basics to grow with my eyes see fit when it's ready to take the next step. I mean, great question. Yes, certainly you do need liability insurance. You know, campgrounds and RV parks tend to be a place where we do see insurance claims come up now and again, right? A lot of RV parks and campgrounds have trees overhead, so we see branches falling. We see, sometimes rain washes away parts of roads, and so we see potholes and broken axles and popped tires. We see lawn mowing and rock shooting this way or that. We see different accidents type happen, and there's often riskier type of activities that happen in campgrounds and RV parks. So we got swimming pools. You may have jump pillows, or you might have wibbits, those kind of big floating things that are in lakes and ponds. You could have canoeing and kayaking. You could be renting a variety of things. You're selling a whole bunch of items in your store, right? There's all sorts of things that could generate potential liability exposure for you as a campground or RV park. And while I would not necessarily suggest that you start to lose sleep over these items, liability insurance is something to consider. And so I think you're asking a really good question because the liability insurance market in the US is just gone bananas in general. The last probably 3 to 5 years, probably more in the 3 to 4 year range. And that's for all sorts of asset classes, not just the campground industry, but in the campground industry, a lot of parks, not all, but a lot of parks have seen escalating premiums, many of them jumping 20% a year annually for the past 3 or so years. And so liability insurance is definitely important and is usually one of probably the top five expenses or so of an RV park. So we're going to have, of course, you're going to have payroll, right? Is probably one of your leading expenses. You're going to see repairs and maintenance. But then you're also going to see liability insurance, advertising, and then, of course, utilities as well. Those are some of the main expenses. And so, yeah, liability insurance, absolutely something you should keep in mind as you're developing your RV Parker question. Thanks for the, or RV Parker campground. So, thanks for the question, Night Hiker. This person, Holistic Health Education says, I waffle, get to the point. I waffle. So, I will apologize for my waffling and just get right to the point, but I do appreciate the comment. This person asked, "What would you?" It looks like Joe, and Joe's channel said, "What would you say the average ROI is for the average campground?" We'll use the word average there twice, probably hedging because you probably know as well as I do that average is sort of difficult question to answer, but let me do the best I can. So, ROI on a campground is going to depend on one, how you're measuring ROI. Are you counting dollars that you invested into the park, right? If you invest $1 million into purchasing a park, maybe it's a $5 million purchase, you put 20% down. Are you measuring ROI based on that $1 million? That's one question. Or are you saying, or the potential, the second way you look at it is what is the net operating income or EBITDA, right? What is that bottom line adjusted net profit divided by the total purchase price? That could also be some kind of measure of ROI. What I would like to do for purposes of answering your question here is I'm going to ignore the first one and answer the second one. The reason we're ignoring the first one is I have no idea how much money you're willing to put into it, an investment, this one or any other, or whether you're paying all cash, financing 80, 90%, no idea. So what I'm going to do is I'm going to answer this based on net operating income or EBITDA divided by sort of your purchase price. But even that's a little bit difficult to kind of gather because depending on where it's located, does it have excess land, buildings, blah, blah, blah. So let me do it this way. I'm going to answer um, the question of net operating income divided by the amount of gross revenue. So, what is your net operating profit as a percentage of your gross revenue? So, here's what I mean by that. If you had $200,000 of net operating income, net profit, bottom line, net profit, and you did $1 million a year in revenue, excuse me, $1 million a year in revenue, that would be a 20% net operating income. I can tell you that for the average RV park and campground, we see somewhere between 30 and 60% net operating income as a percentage of gross revenue. That's a big range, right? It's a double. It's, one is double, 30 to 60 is twice as much. But I would say that's on average, that's where it's going to usually fall. There are some that fall below because they're poor, they're poorly managed, they're not ideal for a whole bunch of different reasons. We could get into that in a different video. And there are some that are a little bit above that, not many, but some that are a little bit above that, depending on the type of park. But I would say that it falls between somewhere between 30 and 60. And our average park is somewhere in the 40 to 50% range. And so when I'm looking at evaluating the financials of sort of a new client, what I'm looking for is that their net operating income as a percentage of their gross profit falls somewhere between that 40 and 50% range. I think that that's pretty healthy. And if you're financing most parks, putting down, somewhere between 20 and 30%, financing that difference, that's 65 to 70%, maybe 75% difference. If you're financing that, having a net operating income as a percentage of gross revenue, somewhere in that 40 to 50% range should give you enough flexibility to make debt service, hire a good management team, and do what you need to do. So NOI average for the average park, difficult question to answer, but hopefully talking about net operating income as a percentage of gross revenue helps you. So appreciate the question. Joe, let's see here. Up North agent said, as it relates to vetting ROI. So another question on return on investment. What is your recommendation if the campground hasn't been operated for years? It looks like Up North agent says this one in particular that he's looking at has been renovated, however, not yet open. So we get this question quite a bit, and it is difficult to ascertain a good valuation when a park either has been shut down previously or maybe it was just reopened, doesn't have a good history that we can look at. So, my best advice for you in this scenario is to simply rely on good performa data, meaning you're going to want to put together performas and projections based on projected occupancy, projected rates, based on kind of average expenses that you can estimate, and kind of back into your net operating income, and therefore back into some sort of a valuation that you can use as you're looking at potentially investing in this property. Now, there's a number of different ways to get that data that I said you need for performance. In terms of occupancy, you can go to some of the national associations, some of the state level associations, and ask for average occupancy. They may be able to help you. Some of the states, like Pennsylvania, for example, is really good at tracking that. The Pennsylvania Campground Owners Association, and so the National Association of RV Parks and Campgrounds, they may be able to get you some of that data as well. You can engage professionals like ourselves. We may have clients that we've worked with in that particular state, sort of geographic region, where we might be able to give you some of the data that you're looking for. But that's where you're going to be your starting point, is estimating occupancy percentage. And then, of course, you apply that to the number of sites. And then what you want to do is you want to do just competitor analysis, right? Look at what the competitors are charging on a nightly basis. That's going to give you a pretty good sense of what you're going to be able to charge your customers on a nightly basis as well. Look at the amenities your competitors are offering, look at what you have to offer, kind of add those things together, add an average occupancy, then all of a sudden we've got a projected gross revenue, and then run that forward for a 3 to 5 year period, putting together some of these performa financial statements, and then of course start looking at average expenses. And we can talk through that at a different time, and of course we can always help you create those performance based on what we know the average expense ratios for the various different expenditures. We can build sort of a projected budget to go into your performa financials. But that's what I would do. I think that's the best thing that you can do, is because the data that they have is nothing. All right. It was a park that was out of business. So I wouldn't rely on old financial statements. If it's been closed for a period of time, newly renovated, I wouldn't purchase based on a broker's projected financial statements, based on the guy who renovated his projected financial statements. Do your own projected financial statements. You can back into these numbers. You can figure out. It's going to take some time. You have to invest some dollars and some professional help, but you can figure it out. And from there, we can get a good sense of what the net operating income is. We can figure out ROIs. We can run all our numbers and just move on. So great question, Up North Agent. Let's see here. We've got some questions here about idle loans, EIDL loans. Of course, that's been fully mitigated. Those have gone. That was a COVID relief program. So not going to answer any of those on this video. Evolving Freedom asked, curious on how to go about a loan for owning a campground. Would the SBA loan be the best option for this? Great question. I'm in SBA. I'm not an expert in mortgage lending, banking, financing, but I've seen a lot. And so let me just give you what I know. SBA, I know, has been changing the regulations even recently. I'm not up to date on the most recent limitations on the SBA loan program. I don't believe there's anything that negatively impacts the potential to purchase an RV park or campground. However, many of my clients have SBA loans that they use to purchase their parks. So SBA certainly is a good option. Here's what we recommend. We always are going to recommend that you go out and solicit 3 to 5 proposals when you're looking at purchasing an RV park or campground. So don't rely on just one potential lender. Rely on 3 to 5 to give you proposals to see if anybody's interested. And the reason we're doing that right now is just the rate environment is high, and some institutions have a little more flexibility than others in terms of what they're looking for. Um, and so here's where I'm starting. The first thing I'm doing is I'm starting by looking at the SBA, right? I'm looking at the SBA directly, probably also SBA through a SBA mortgage broker. There's a number of them you can Google, but they kind of broker your deal out to multiple SBA banks and lenders. and they work for the SBA themselves and those lenders. You don't pay them directly, so it's a good option. So we're looking at SBA, right? That's where we're starting. The second thing that we're going to look at is we're going to look at the bank that currently holds the note for the seller. And so, for example, and I'm just going to make it up, if Wells Fargo is the lender to the seller, meaning the current note is being held by Wells Fargo, then I'm probably going to Wells Fargo and I'm saying, look, y'all hold this note already. So you've already done underwriting on this thing. Now you've not done it at the valuation I'm going to pay, but you've done underwriting. I know you're going to have to do more underwriting, but is this something that you would consider investing in me to purchase this new part, since you already kind of had familiarity? We see that most often successful when it's a local bank, when it's sort of a local regional bank, maybe something that's in one state or a handful of states. Usually, those folks are pretty interested in keeping the asset on their portfolio because they know the business. Like the banker, the board is pretty intimately familiar with the numbers and what's going on. They've seen the payments coming in for the last 5 years or whatever. So I'm going there second, right? The third thing I'm going to look at is I am going to look at any banks that I have a personal relationship with, meaning maybe you're in a different state currently, right? You're buying, say you're located in Georgia, this is where you live, but you're buying in North Carolina. Of course, you're using that North Carolina lender as your second option that already holds the mortgage on the seller, holds the seller's mortgage. But if you got a bank in Georgia that you've used maybe for another business or whatever, that's my next option, right? I'm going to really look at them to say, hey, you know me personally. Maybe you know my other business. You've seen my other real estate assets. You know I've got collateral. Can we work a deal out here? Is there anything that you could do? That's going to be my third option. My fourth option is there is a couple of banks that bank specific, not specifically, but they have a heavy presence in the RV park and campground space. Independence Bank out of Montana, I believe, is one. If you've got a KOA franchise, for example, they lend on a large percentage of the KOA deals. So if you're a KOA, I'm actually probably starting there. But I'm probably looking at that as my fourth option for almost any other bank. And if you need a contact there, reach out to me, Michael at campandparkaccounting.com. Love to connect you with those folks. Or also Unity Bank, and they're out of the Midwest, I think, somewhere, but I can get a contact for them as well. So I'm looking at those lending institutions, and then beyond that is the fifth sort of option. I'm probably just starting to look up regional banks that are in the area. Now, a lot of them are going to be covered probably in the first one under the SBA because a lot of them are going to be SBA lenders, but I'm looking at regional banks. So that's kind of how I'm looking at financing an RV park or campground at this point in time. I should, I feel I should also add in this. You also might want to look at bringing in investors. There are real estate investment funds, people that are interested in pouring money into the RV park industry. And so you might want to see, do I have somebody in my network that maybe does multifamily? Maybe they do storage units, and they're looking to move some money into other places. I may be asking some of those folks if they're interested in kind of coming in and doing a deal. Maybe even if it's for equity, are they interested in coming in and doing a deal? Daniel asked, I'm looking at an RV park for sale for 280,000 for 31 spots. It's been abandoned for 3 years. Advice. So this is going to go back, Daniel, to what I already just answered, in terms of how we look at projecting the financial statements for a park that's been closed down. I by no means would discourage you from looking at one that's closed down. I think that's where the opportunity is. I mean, campground valuations are high right now, much higher than they were, say, 5 years ago. They're not as high as they were 2 years ago, but they're much higher than they were 5 years ago. And honestly, if you're not planning to own or operate, meaning if you're planning on living off-site, hiring an outside management team, then it's difficult to get a real good cap rate as a buyer today. And so one of the major sort of value plays that exists right now is to find those dilapidated, closed down parks and say, what do I need to do to turn this thing around? Now, you asked for some advice. I would say inspect the heck out of this, right? Because everything at a campground or RV park is expensive, especially as it relates to sewer, septic systems, water systems. Make sure you get those inspections done, because this isn't like this isn't like your house when if you need a new well, it's going to be 8 grand to get those guys to dig. I don't even know. Maybe it's more than that for your residential house, but we're probably talking 30, 40, 50,000 at a campground RV park. If you need a new septic system, maybe it's a maybe it's a sewer plant. I mean, we're talking $500,000. And so that thing can explode real fast in terms of cost, and what looks like a good deal could be a not so great deal. Also, of course, you're going to want to get environmental inspections, and all sorts of other things to make sure your bases are covered there. So definitely doing inspections and things like that. Had another question. Let's see here. Where is that other question here? This person said, after watching a video, I still don't understand what the expected ROI is on a campground. Let me go back to this, because I've seen lots of comments here about expected ROI. Um, I think the important thing to keep in mind is that ROI, if you're looking for a clear answer about what percentage are you going to return on your money, is different than if, say, you were investing in single family or multifamily asset classes, which are more stabilized, right? In terms of institutional money has come in, valuations have kind of settled. And so we can better expect, based on standard industry terms and valuation multiples, we can kind of have a better understanding of what ROI is on invested dollars. However, a lot of that is not fully settled in the campground industry as of yet. And so a lot of what you need to do is you need to be looking at NOI as a percentage of your gross profit, understand what is an appropriate cap rate, meaning like, is a campground worth an 8 cap, or should I be buying at a 12 cap, understanding cap rates and backing into what is an appropriate ROI, because I don't believe that today there's just um, a super straight answer in that. So another question somebody asked is, what are the types of ways that campgrounds are funded from what I see? This person says, I'm interested in purchasing a campground. I have no debt, 50K in non-liquid assets, but nothing to speak of from a down payment. Are there funding options you see for folks without a down payment? I mean, we're starting to see more and more in the campground space, but really in all real estate spaces, we're seeing this general idea of creative financing. You'll see folks like Pace Morby, these sub two guys, a whole bunch of different guys out there that are talking about creative financing. And I think there is some of that that probably is available in the campground space. You have to find the right buyer. I don't think that you're going to likely find many, because a lot of them are not going to be interested. A lot of these guys want to cash out. They've owned these parks for 20, 30, 40 years and are wanting to cash out at sort of what they perceive as high valuations. But there are a couple of creative financing mechanisms you can look at. The biggest one of which is owner finance. A lot of these folks are willing to accept substantial owner financing if the valuations are right. Meaning, if you're going to give them a healthy valuation and a decent interest rate, they're willing to owner finance to you. But usually, that's going to come with a moderate to substantial down payment. It's very difficult to purchase an RV park today without putting any money down. There are people that are doing it. I don't think we're seeing a lot of quality parks sold that way, but there are some, just not many out there. One of the creative financing strategies that a lot of folks are using, probably a little bit more common and prominent a few years ago, but are using still today, is by using their 401k through what's known as a ROBS, ROBS, rollover a business startup plan, which is where you take your 401k and you roll it into you roll it into a 401k that owns a corporation that can purchase a campground or RV park. And so we are seeing folks. I'm in conversations with a buyer right now who's considering potentially rolling over their 401k so that they have a chunk of money to use as the down payment. Because as we all know, campgrounds and RV parks are expensive. And so we're talking about a $3 million campground or RV park needing to put down three, four, $500,000. That's a lot of cash to have on hand for anyone. And so a lot of folks are using rollover business startups, ROBS plans to roll their 401ks in. So that can be considered a creative financing method as well. But there's a couple of different things you can look at. Um, Let's see here. This person said, how do I start a camping site on my own property, like Airbnb, just tents? Um, most campers will be driven by customers. I have a lakefront property that has great views and secluded. I only want four families at a time on the weekends only. Do I need an LLC for pitch tent campers? I'm not an attorney. I don't play one on TV. Certainly don't play one on YouTube Live. But let me just say, from an accounting perspective and just a common sense perspective, if I am renting my property to somebody for compensation, then I am likely doing that through an LLC, a limited liability company. Of course, I am consulting with my own attorney to determine whether or not that is necessary. But almost every situation, from what I've seen, attorneys tend to recommend some sort of liability protection. Certainly, you're going to want contracts with your customers to make sure you're protected from a legal perspective. But consult your attorney because LLC is probably something that you want to think about, but they're going to have better advice than I. Now, in terms of can you do it and how do you structure it? Yeah, I mean, I think putting, I'm looking at here on my back. I think putting some sort of a covered wagon or a yurt or one of these the geomestic domes or treehouse, right? I think you could do that out there. And the question is, does it operate more as a campground or RV park, or does that look more like an Airbnb? And how do you list that? I think it's a great question. I think having things like that, if it's sort of an alternative accommodation, I think listing that on Airbnb probably makes more sense than treating it as a kind of a regular campground or RV park. I think there are several sites. I don't remember them off the top of my head, but I think there are several sites out there that do let you rent out like a site at your property, potentially for someone to come and stay the night without being a formal campground or RV park. So certainly something you can look at. Not a bad idea. Certainly something that should be considered. Someone asked us, Stephanie asked, can you provide educational materials like Bigger Pockets, but for RV park investing? I would love to, Stephanie. It's just been a time issue the last number of years. But I would love to do that. Bigger Pockets. I have nothing but respect for those guys and what they've done in the real estate space. I know they've got some things on RV parks or campgrounds, but it's a little bit more limited. So yeah, as time goes on, we'd love to kind of generate some of those resources. This Dennis asked, "Do you know of campsites for sale, campgrounds for sale in the southeast?" Yeah, I mean, there's a lot. I've got several clients that are for sale in the southeast. And they're all listed on some of the common broker websites. But one in particular you could look at. A lot of the brokers post their listings. There's rvparkstore.com, rvparkstore.com. You can sort by state, see what's out there. There's also a number of brokers. I won't mention any specifically because I've had mixed interactions with some of them and don't want to call specifically out which ones. But if you just Google campground brokers, campgrounds for sale, you'll see the top 8 or 10 resources. But rvparkstore.com is one where you get a kind of a quick and dirty feel for what maybe is available in your state. I'd start there. But just know that a lot of what's on the market today is pretty high price. And so depending on what your price point is, what type of deal you're looking for, or it may or may not be right for you. Let me see if there's anyone else. This one said, Seth said, how many RV parks and campgrounds have septic tanks? Almost all RV parks and campgrounds now have some sort of a septic tank sewer system, sewer plant. They potentially could be on city sewer. How many have septic tanks? That's really hard to say. It's a higher percentage in the Midwest than it is on the East Coast and out west, and even more, a little bit more than the South. So it really depends on what area. I don't want to put a percentage, but I would say probably at least a third have septic tanks, would be my guess. I would say probably and I don't even know. I'm off the cuff here, but I would say a third are septic tanks, a third are probably some sort of city sewer, and a third are probably sewer plants. It could be higher, but could be lower. But it's probably somewhere between 20 and 40% for each of those. And so depending on what you're looking at, you could kind of figure that out. Again, someone asked reasonable ROI. We've kind of been over that pretty good here. Let me see if there's anyone else, any other questions we want to answer. here. This person said, "Do you have any spreadsheets or tools a prospective buyer could use as a starting point?" I really don't have any sort of spreadsheets with common multiples and things like that. And the reason for that is that RV parks and campgrounds are really different depending on the type of park and depending on the location. And I'm really hesitant to give generic tools out that could be misapplied because calculating ROI, as we've already gone over, can be very different depending on the type of park we're looking at. So certainly, if you reach out to Michael at campandparkaccounting.com with a specific question, I'm happy to see if I've got any resources available that I can send your way, or even do a consultation project with you to try to figure out if there's some way we can kind of try to back into some of your questions. Let's see if there's anything else in here I want to go over. I don't think there is. I think that's all of the questions that I had left unanswered. But yeah, so thanks for joining us today at Camp and Park Accounting. We exclusively serve campgrounds and RV parks. We work with more than 40 parks, more than 20 states. We've worked with probably over 100 parks the last 5 years in nearly every state. And love to be able to provide really tailored and specialized accounting, income tax, planning, strategy sessions for campgrounds and RV parks, whether they're in the process of buying, selling, holding, investment groups, family offices, private equity. We work with everyone. And so if you ever have any questions or concerns, need advice, please feel free to reach out. And if we have capacity, we'll gladly consider taking you on as a client. Our website is campandparkaccounting.com. You can get information about our firm, ways to get a hold of us to book a call. Just let us know what you need. Thanks everybody for joining us, and we will be pushing out more resources here in the near future. Have a great day.